Have you ever looked at a cryptocurrency chart, seen a token locked in a prolonged falling trend with technical sell signals flashing across multiple time frames, and yet heard a group of passionate investors claiming it is completely undervalued? It makes you wonder if they have spotted a diamond in the rough or if they are simply trapped in a sinking financial ship. Today we are diving deep into one specific asset that is causing exactly this kind of intense polarizing debate across the decentralized finance community. We are looking at American Account Trust Fund, a cryptocurrency project trading under the ticker symbol AATF, currently sitting at a global market ranking of around number 7,939 on prominent digital asset index trackers. This token has been capturing a massive amount of attention from data-driven day traders. Over the last 24 hours, the price has remained remarkably flat, creeping up by a tiny 0.29% to hover right around the $0.002051 mark. This sudden lack of movement after a macro downward shift has left the market completely divided. Is this flatlining price action a sign that accumulation is happening before an explosive recovery, or is it a classic value trap designed to drain the remaining capital from unsuspecting retail wallets? Before we break down the underlying mechanics, the liquidity health, and the momentum indicators of this specific low cap token, make sure you hit the like button right now, subscribe to the channel, and it is absolutely compulsory that you leave a comment down below telling me if you are currently holding AATF or if you wouldn't touch it with a 10-foot pole. Your comments are what keep this channel going, so do not wait. Leave that comment right now. To truly understand why American Account Trust Fund is causing such a massive stir among speculative traders right now, we have to look past the ticker symbol and analyze what this project actually aims to achieve and why it has suddenly stepped into the spotlight. AATF positions itself as a specialized, decentralized financial infrastructure project designed to bring trust fund compliance and structured accounting mechanisms directly onto the blockchain ecosystem. Unlike basic meme coins that rely entirely on internet jokes and viral hype, a protocol like American Account Trust Fund tries to establish a foundational use case, blending digital treasury management with secure smart contract frameworks for long-term wealth preservation. In the broader crypto markets, these types of projects are often referred to as utility or trust-based protocol tokens. However, despite the technical ambitions of the project, the asset finds itself in focus today because of a severe disconnect between its intended institutional goals and its actual market performance. When a financial utility token experiences a sustained multi-month price decline, it immediately triggers red flags for long-term investors, while simultaneously flashing on the scanners of high-risk scalpers. The market is looking at AATF right now because its tight consolidation around fractions of a cent represents a critical structural crossroad. If the project cannot attract active capital pools and real-world compliance users to utilize the network for actual trust transactions, the tokenomics model begins to decay, leaving the price vulnerable to the whims of thin liquidity and shifting macro trends. When we transition over to the technical analysis, the charts paint an incredibly tense and delicate picture for AATF. The primary macro trend direction for American Account Trust Fund has been dominated by a clear, persistent downward slope, characterized by a steady sequence of lower peaks and declining valley floors. This consistent lack of upward momentum has triggered multiple technical sell signals, as short-term moving averages have crossed cleanly beneath longer-term historical baselines, confirming that institutional and automated sellers have been dictates the pace of the order books. However, as the price stubbornly stabilizes around this $0.002051 mark, the asset is testing a massive psychological and historical support zone. This specific fraction of a cent level is a line in the sand for the remaining buyers. It represents an area where historical buying interest previously stepped in to absorb heavy sell orders, creating a temporary floor for the market. If the support zone holds over the coming days, it could lay down the necessary foundation for a significant relief rally, or at least a prolonged period of horizontal accumulation. On the flip side, the overhead resistance levels are incredibly dense. Any sudden push upward by the bulls will immediately run into a wall of selling pressure from traders who bought in at higher levels and are just waiting for a minor bounce to exit their positions at break-even. Momentum oscillators like the relative strength index are hovering in deep oversold territory, which is exactly why some market participants are screaming that the token is fundamentally undervalued. But veteran traders know that in the world of microcaps, an asset can stay oversold far longer than retail accounts can stay solvent, and short-term weakness remains the dominant narrative until a massive spike in trading volume confirms a structural trend reversal. When you look at the broader ratings and market signals available for American Account Trust Fund, The automated data streams and liquidity health scores lean heavily toward an attitude of extreme caution. In this specific tier of the cryptocurrency market, you do not have traditional Wall Street investment banks giving formal buy, sell, or hold ratings, but you do have decentralized smart contract scanners, whale tracking tools, and historical consensus algorithms. Right now, these independent technical ratings are pointing firmly toward a sell or strong sell bias because of the total breakdown of key historical market structures. The negative signals are compounding as blockchain ledger data reveals that early pre-sale investors and large wallet holders are slowly but surely distributing their tokens into the retail bid, leaving the average community member to absorb the daily sell pressure. The short-term outlook for AATF remains highly defensive because the asset lacks a strong independent marketing or product catalyst to break it away from general market conditions. When major base assets like Bitcoin or Ethereum experience sudden liquidations, small-cap financial protocols tend to suffer twice as hard as capital flees toward safety. The flashing red lights on the technical scanners are a clear warning to day traders that stepping into this chart right now carries a high probability of loss, yet the highly speculative crowd continues to ignore these negative signals, betting everything on the hope that a surprise development update or an unexpected exchange listing will completely rewrite the technical reality overnight. This brings us to the ultimate question that is tearing community forums and trading groups apart. Is American Account Trust Fund genuinely undervalued at these current prices, or is it a textbook value trap designed to lure in naive buyers? The argument for it being deeply undervalued rests heavily on its theoretical financial utility and its micro-cap valuation. Proponents point out that if the underlying trust framework achieves even a fraction of its intended institutional adoption, the capped nature of the AATF token supply could cause the price to surge violently due to basic supply and demand economics. They view the current $0.002 price point as a gift, arguing that the token is simply resting at an absolute cyclical bottom before the next major network upgrade triggers a wave of organic buying. However, the counter-argument for this being a dangerous value trap is incredibly compelling. A value trap occurs when an asset looks remarkably cheap simply because its price has experienced a massive crash, but the market fails to realize that the fundamental demand for the token is completely evaporating. If a project fails to build a thriving, active ecosystem of actual users, a low token price doesn't make it a bargain, it just makes it a depreciating asset that is slowly bleeding out. Retail traders frequently look at a low nominal price tag and assume it cannot possibly drop much lower, completely overlooking the fact that a digital asset can always drop another 90% from any price level if liquidity is entirely withdrawn from the decentralized exchanges and market makers pack up and leave. The downside risks associated with American Account Trust Fund are massive, and the underlying volatility is precisely why retail traders so frequently find themselves completely trapped in these types of setups. In the decentralized finance ecosystem, lower ranked tokens suffer from incredibly thin liquidity depth in their automated market maker pools. This means that a single large sell order from a project insider or an early venture capitalist can trigger a catastrophic double-digit price crash in a matter of minutes, completely bypassing any stop-loss orders that traders have set. Retail buyers often enter these highly volatile positions using excessive leverage or investing capital that they desperately need for daily expenses, driven entirely by the intense fear of missing out on the next big market runner. Once the chart begins to slip, psychological panic takes over, but because the selling pressure is so concentrated, the bid-ask spread widens exponentially, making a clean exit virtually impossible without accepting devastating financial losses. This creates an emotional and psychological trap where retail investors decide to convert their short-term momentum trade into an involuntary permanent long-term investment, holding on for dear life while hoping for a miraculous recovery that may never come as automated trading algorithms slowly grind the remaining asset value down to zero. If we map out the absolute best case bull scenario for AATF, it depends entirely on a massive resurgence of community coordination and a sudden, unexpected influx of external liquidity. In this optimistic recovery timeline, the current support floor holds perfectly over an extended period, causing the immediate selling pressure from early holders to dry up completely. A major whale or a coordinated group of decentralized autonomous organization buyers steps in, executing massive market buy orders that trigger an aggressive short squeeze, forcing day traders to buy back their short positions at a loss. This sudden surge would cause AATF to break cleanly through its immediate overhead resistance levels, transforming the previous technical sell signals into a flashing momentum buy indicator as the trend reverses lines on the daily charts. If the development team delivers a major real-world partnership or manages to secure a high-tier centralized exchange listing, The token could easily erase its recent structural losses and begin a steady march back toward its previous historical highs. Conversely, the bear case is an incredibly straightforward continuation of the downward spiral. If the psychological support floor snaps under the weight of ongoing liquidations, there is very little historical order block data available to prevent an absolute free fall. The downside momentum would accelerate rapidly as the remaining retail holders panic and cut their losses, causing trading volume to dry up entirely and rendering the token completely stagnant, leaving it to sit permanently at the bottom of the tracking indexes as another warning sign of market brutality. Looking at the overall market outlook, there is a massive, unbridgeable divide between the short-term reality and the long-term potential of American Account Trust Fund. In the short term, the price action is going to be completely dominated by market noise, order flow imbalances, and highly speculative day-to-day manipulation. The price is highly likely to remain incredibly erratic and choppy, providing dangerous trading conditions that heavily favor automated high-frequency scalping bots rather than casual human investors. Long term, the absolute survival of the ATF token depends entirely on actual protocol utility adoption and whether the development team can construct a sustainable economic loop that outlasts the current speculative market wave. The harsh truth is that the vast majority of financial infrastructure tokens launched in this sector have an incredibly short operational shelf life, completely fading into obscurity within a couple of years once the initial marketing capital runs out. For ATF to break out of that destructive cycle and achieve multi-year viability, it must transition away from being a purely speculative digital trading card and transform into an undeniable piece of network infrastructure that institutions are willing to integrate on a daily basis. Ultimately, we are left standing at a critical crossroads of complete market uncertainty, staring at a chart that could just as easily double your risk capital or completely wipe out your allocation by tomorrow morning. The technical data tells us to be incredibly cautious. The passionate online community tells us to buy the dip. And the economic truth usually lies somewhere precariously hidden in the middle. Is the current fractional cent price tag of American Account Trust Fund a final warning sign to stay away, or is it the absolute quiet before a massive storm of profit? Let me leave you with one final cliffhanger question to think about. If you woke up tomorrow morning and saw that the AATF token had dropped another 50% from this exact level, would you look at it as a tragic investment mistake or the absolute buying opportunity of a lifetime? Think about it, leave your honest answer in the comment section below. Make sure you have liked the video and subscribed to the channel, and I will see you in the very next market update.